Hi, I'm here with Robert Gold, investment banker with the Chicago Corporation and also an attorney with Aegis Professional Services. Robert, please tell me how you create value for your clients.
Well, like most lawyers, you create value for clients by anticipating problems that may arise and then structuring contracts or a business in a way to anticipate those problems, like I said, and try to avoid them or minimize their consequences should they arise. So, for example, if there's a desire to compensate employees with equity, there's a lot of ways to achieve that, but your big concern is you don't want a disgruntled former employee to be an equity holder in your business with the rights that entails. Not just the money, but the rights to inspect your books and records, to object to certain transactions and things along those lines. And you can address that in a shareholders agreement, or you can address that, for example, by giving them phantom equity. There's not real equity, but they get a bonus as if they owned equity. And so that's just an example of how you anticipate a potential problem and then put in a structure to minimize it or eliminate it.
Great. And who is your typical client?
My clients run in a big range, but if there's a typical one, it is an entrepreneur and their businesses, or a family-owned business. Again, I tend to focus on middle market, privately held companies and some of the unique problems they face, whether it's estate planning, governance, or just making sure that when you reach a conclusion or make a decision, you do it in a way, particularly in a family-owned business, where, as I put it, people can still have Thanksgiving dinner with each other without killing each other. And that can be pretty important.
Absolutely. Now, what are some common tax and governance issues that arise when a new business is formed?
Well, the most common, or the first governance issue that has to be addressed, is if there's more than one owner, either because you're raising capital or it's several people coming together to contribute not only money but their sweat equity, is how are decisions going to be made? How are disputes resolved? How do we prevent sort of little issues from piling up that create ill will and can destroy a business? Those are sort of the common governance issues. And when, what do you do if there is a dispute that can't be resolved? And how do you resolve that, quite frankly, short of going to court, which can happen? And as a general rule, and I say this as a lawyer who doesn't go to court, if the worst thing that can happen to you is losing litigation as a business person, the second worst thing may be winning litigation. It costs a lot of money. It's a big distraction from your business, so you want to avoid it. So that's something to keep in mind. The tax issues are numerous, and it really depends on the exact facts and circumstances of each situation. But if there's sort of some things to keep in mind, yes, there are obvious income tax issues, why people are attracted to entities like LLCs and S corporations that don't pay income taxes. But there are other issues like employment taxes, sales taxes, and the like that also need to be considered, particularly in the early years where there may not be a lot of income for the business because it's just starting out. But those taxes may be very important in the early years. So that's important to keep in mind.
Sure. Now, Robert, you have a very interesting background. You're both an investment banker and an attorney. How does this impact the legal services that you provide?
Sure. There are a lot of lawyers out there who are very good at what they do, very savvy about the business world. But they're lawyers and they look at things from a lawyer's point of view because that's who they are. And it's sort of that old saying, to a hammer, every problem is a nail. I can bring a different perspective to it and put on that banker's hat as a lawyer and say, that's great, and you're minimizing your risk in this regard. But in making that decision and doing your cost-benefit analysis, here is how it may play out when you go to sell your business and a potential downside to it. Or as a banker, I may, using that banker's hat, say, look, when you go to sell your business, these are the things that will drive value. And how can we structure your business in such a way so that we can emphasize those value drivers and make them more prominent?
Great. And now you work with a lot of businesses and startups. What advice would you give to startups in the formation process?
I think the biggest mistake I see people starting a business make from a legal point of view is walking into a lawyer and saying, I need you to form an LLC for me. I'm starting a business. And what they've done is they've reached a conclusion that is a legal, accounting, and finance conclusion, and they're business operators. What I recommend that people starting a business do is think about what they're trying to achieve. What am I trying to achieve in terms of raising capital now and in the future? What am I trying to achieve in terms of employees? What am I trying to achieve in terms of my perceived eventual ideal exit from this business? Do I intend to sell it in 3 years? Do I intend to take it public in 5 years? Do I intend to build an institution and leave it to my family? Those are all can lead to different outcomes. Once you've figured out what your objectives are, then is the time to sit down with a lawyer and an accountant and maybe even your estate planner, depending on where you are in your life, and put those on the table and work with your experts to figure out what the right solution is for you and that business at that time. So if it's the best advice I can give is figure out what your objectives are, get good advice, and don't come in thinking that you already know the answer, because sometimes it's counterintuitive.
Sure, that's great advice, Robert. And what are some activities you would do in an acquisition?
Well, in an acquisition, as a lawyer, there's a series of items or things that a lawyer has to help you do. But it ends up coming under sort of the, whether that's due diligence or drafting a contract. What you're really trying to do is make sure that the party you represent, the buyer or the seller, if it's a buyer, that they're getting what they think they're getting. And that includes thinking about things like, we think we're buying this company, but we don't think we're assuming this environmental liability. Or we think we're buying this company, but we don't think we're buying tax liability from 3 years ago. So there's those protections. You're also trying to, for example, if you're representing a buyer, use the legal structures to make the deal as good for your client as possible. And this would come into, for example, how the purchase price is allocated amongst the various things you're buying. Are you buying stock? Are you buying assets? And if you're buying assets, how do we get that basis stepped up to create additional depreciation to help shield income going forward? If we're buying equity, are there things that can do that? For example, if you're buying equity in an S corporation, or elections you can make that may allow you to take that step up in basis. As a seller, I want to make sure that my client's risks in this transaction are clearly identified and quarantined, as I like to put it, so that they know when they're done. I don't like the idea of clients 6 years, 7 years after a transaction still worrying about something. And likewise, if there's a contingent aspect of the consideration they're receiving, an earnout, for example, is that structured in such a way that it's real, they're likely to get it? Is it structured in such a way that there's unlikely to be a dispute, or we minimize the odds of a dispute over the amount? Again, this goes to trying to provide some certainty to the seller. Part of what you get when you sell a business is knowing what you've gotten and knowing when you're done. You may not be done immediately. You may have to help out for a period of time in that transition, or you may become an employee. And it's then helping the seller understand the implications to them, both legally, financially, and to a large extent personally.
Great. And Robert, I have one last question for you. What are your goals in business in this next year?
It's an interesting question. My goals in business are what they have been, for a long time, which is, one, to continue to help clients with their problems and opportunities, to continue to do interesting work, which involves both interesting problems but interesting people and interesting businesses. That's what keeps it, fun still after almost 20 years. And to continue to grow the business, to meet new people. One of the reasons that I enjoy working with entrepreneurs, as someone who's run my own law firm, who has started an investment banking firm, I'm an entrepreneur myself, and I enjoy that world much more. I think it's more interesting to deal with someone who's started a business or has taken over their family's business and is emotionally invested than working with a vice president of business development who's one of 50 vice presidents in a large organization that may be a very interesting business, but at the end of the day, that person may view this as a stepping stone, as where I like working with people where they're creating or building on a legacy. And so I really want to continue working with people like that.
Great. Robert, I thank you so much for your time.
Thank you.
And if you're interested in learning more and connecting with Robert Gold, go to fundology.com.